You're tuned in to Agriculture Today, and we start our Friday show with some information about the grain market. And then to talk about it today, we're joined with K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
And Dan, today taking a little bit different avenue when talking about the grain market is we've talked a lot about these upcoming reports, and they're now out from the USDA. And so first, talking about kind of the combination of that report and corn harvest taking place and what it's done to corn basis.
Well, to start out with, again, following on the heels of the bellwether report that came out on September the 12th, which has a lot to do just that data itself that come out in the crop production report and the WASDE World Agricultural Supply Demand numbers have a large determining influence on the market for the next several months. So changes can still happen in final yields for especially corn and soybeans and even grain sorghum, but the die is cast now. We've kind of moved towards where we think the general vicinity of these yields and production levels are, and where the balance sheets might work out. But as you mentioned, harvest is on the verge of beginning, if not having begun, down the very southeast parts of the state, and we've seen corn basis begin to reflect that. In fact, if you in the data that we put together coming in for this report on the Ag Manager website, we have the corn basis in Colby, Salina, Topeka, Wright, Kansas down southwest, Hutchinson, and Columbus down the southeast corner, and in all but in every one of those places over the last 4 or 5 weeks, we've seen corn basis sharply weaken, and that's indicative of thoughts of at least moderate harvest coming into play, and that those elevators are anticipating enough supplies that in terms, at least in the short run, that their basis would soften some, and the places where I guess the most noteworthy drops have happened would be down the southeast part of the state, where we have a basis level that's probably about at least 30-40 cents lower than the recent 3-year average. We've dove below the 3-year average also in Hutchinson, where we're about 60 or 70 cents under for the current cash price. Have dove low also in Salina, where we weakened considerably. It's interesting in Colby and Wright and in Topeka, basically we're down to that 5-year average. So I'm not sure what that says about different parts of the state, but as harvest comes on, and unless we get into the fields and we really see weakness, or in terms of yields, you'd expect that trend that we've seen now to continue. That it's with the caveat that when we come to the October report, the November report, for corn especially, that if we see a lot weaker yields than we've seen so far, if this most recent yield of 173.8 that the USDA reported on Tuesday with that September 12th report, if that ends up moving lower to say 172, 171, 170, which seems quite a drop, but still that's been the trend where we have been dropping month by month. Then you get to the place where we've tightened up supply demand enough where ending stocks on that balance sheet drop down to and below 2 billion bushels, and then we start to think differently about price trends for corn heading off into the fall.
And as we've talked about corn, now moving on to another crop important to Kansas, soybeans. And so what have we seen with that report and how has the market reacted?
Well, the U.S. soybean supply demand balance sheet responded somewhat to lower yields. We saw the USDA project yields of about 50.1 bushels per acre, down from 50.9 in the August report, and frankly, at least in my thinking, and I think there's a lot of people in the market that are analyzing the market, looking at that when we were looking at conditions on September 1st, there's still a lot of impact that can still be had on soybean yields, a lot that can be had on corn yields too, but you're more in the finishing out phase for corn. You're a little closer to the key production times for soybeans, that heading off now into that October report, we could see that number drop even lower? Does it drop below 50 bushels per acre down to 49.5, down to 49 or something? Given the heat that we've had, et cetera. So that could still come in. The issue with soybeans all along has been that earlier on in September, well, pardon me, in June, we saw that acreage report show just about a 4 million, well, 3.9 million acre reduction from where it from previous estimates from of what we thought we had out there. And with that, gosh, we just tighten down the acreage production base to the degree that it that we're now down projecting about 4.15 billion bushels of production. If we drop much farther, then we take the ending stocks down, figures down so much that things are just really tight. We're down now to 220 million bushels. Well, if we take another bushel per acre off that, we're down below 200 to 175 or something. And then we're in the position where the markets could find a I was going to say a quote whole lot of support. That's not a very scientific way to say it, but a lot of support if we move even lower than for stocks for soybeans. So much now with this in hand will depend on those future USDA reports, but also on planting conditions down in South America. We're just heading off into these last few months of this year, calendar wise, and that's when Brazilian farmers will move into the fields and go forth. I think this report also sets up a bit of a situation where we've come out of this a little more positive now for soybeans than we are for corn, and the South American farmers will see that very likely to encourage more soybean production than corn. And if that works itself out, then you end up at the end of 2024 with the roles kind of switched. If we have a whole bunch of soybeans and just a moderate amount of corn produced down in South America because of these acreage changes, well, then that tends to even things out, or maybe trade places by the time we get to this part of calendar year 2024.
So go ahead and looking forward to seeing who knows what the October report's going to actually say then.
Yes, I think it's very possible we could still lose a half a bushel, a whole bushel, or possibly even more off the soybean supply demand balance sheet to move ourselves again below 4.1 to 4.05 or something for billion bushels, and with that to tighten up that balance sheet closer to 150 to 175 million bushels. And then you start to look around and say, gosh, it looks like we're going to have to ration usage in the United States. Prices would go up to accomplish that, and put us in a situation where we'd have quite a bit of volatility in the U.S. and world soybean market in response.
And coming back to this September report now and talking about wheat and kind of the international supply demand of it.
No changes at all in the U.S. domestic supply demand balance sheet, and really, that's almost by plan, because at the end of this month, September 30th, around that date, we'll have the annual small grains production report, and where we'll get final numbers based on USDA survey findings for wheat and some other small grains. So I think we'll wait on the production side to see what that comes out and says. However, on the international side, we've got a very noteworthy situation to where we see the ending stocks now drop. Well, ending stocks coming out of this report dropped 7 million metric tons from August, and we're down 8.5 from a year earlier, and we were already sitting at 16-year lows for percent stocks to use. So we're the world minus China percent stocks to use figure for wheat is it's under 19%, down to about 19.4, I believe. So tight as can be, and drought in Australia, problems in Canada, problems in other parts of the world, etc. And China having also turning dry. So you've got India also having its issues. So here We sit in Kansas. We wonder about where the wheat markets are going. We see weakness in prices generally, but yet all around the world there are problems. So I just think we're heading into a time when we could have a whole lot of volatility. And oh yes, by the way, we're wondering how many wheat acres we're going to plant come October. So it's just quite the time of volatility and questions coming into the Kansas wheat market and well the U.S. wheat market overall.
Dan, overall, then for the whole world, is it almost all weather dependent market?
You know, for the I think we always start with production. It's a supply driven situation, and then we start to worry about the flows, and that's where all these challenges in the Black Sea regions come into play. But overall, we have a pretty consistent usage, pretty consistent demand for these crops, and it's just a matter of as we shift acreage around and hopefully get yield increases, can we produce enough to keep meeting the demand? And if we fall short, then prices have to jump. And if we overshoot that target of usage, then prices drop. So I guess we're chasing on the production side, we're chasing the usage almost all the time.
And from the September 12th WASDE report, were there really any surprises? Because we've talked a lot about it. So did you kind of see what you were expecting to see?
Um, yeah, I think that the uh, the drop in corn yields was the 173.8. That was pretty much in line, just a little bit higher than what was thought, about 173.3. The big surprise actually was the increase. The USDA come back in, looked at Farm Service Agency acreage figures, et cetera, and actually added corn acres on top of what they'd already had before. And that's if anything, that was to me the surprise and unexpected that they'd actually add corn acres. So that in a way mitigated the drop in yields. We ended up with a projection of 15.1 billion bushels. Well, that's even though the yields dropped, by the time we increased the acres, we ended up at almost the same place as we were. So that really kept the corn market from being very responsive to that yield per acre drop, just because, gosh, we increased acres again.
So for our Kansas producers, what does this all mean?
For Kansas, I think that as we sit right now, it's probably judicious to anticipate just moderate prices at harvest. And we're talking moderate being 450, 475. If we have strong harvest in some areas, even weaker than that. But that but so I think that we are probably in the mode of probably storing some grain unless we have cash flow needs, storing some corn. I haven't mentioned grain sorghum, but we have some pretty strong grain sorghum demand going on right now. Strong exports. The last set of numbers looking pretty strong. So I think we'll be watching for strength in the sorghum market. And again, you look at some of these areas that are export wise, that the sorghum price, both the current and the October price, are both above corn. So you've got that happening, and that's certainly welcome on the sorghum side. I think what's expected, I I don't doubt. I wonder when the market will look towards new crop 2024 July wheat and start to wonder if the price is high enough to encourage production or not. And so far we haven't had really that signal show up much. The last time we've looked at some of those price areas, we're looking at prices about for new crop about 733, 735, something like that. Not terrible, but also not $8 either. And so I guess as you and I have talked about, the deciding factors for what they're going to plant, for what farmers are going to plant or seed for wheat, will be moisture and crop rotation first of all, and then they'll look at the crop insurance price, which is about 730, something like that, and they'll say, that's not bad, and they'll look at their cost of production estimates and see if it's making money, and then in their crystal ball, they'll do like we do. They'll look out there and have some expectation of what they think next year will be like, and they'll see a market that is just is jumping around and has lots of uncertainty with regard to what could happen overseas, particularly in that Black Sea region issue. So much of the wheat market right now is driven by the whether the Black Sea wheat can move or not out of Russia, what's happening in Ukraine. And so when you ask what's uncertain about the wheat market when it comes to those issues, it's what's uncertain is the Black Sea region, and it's what's I think we have to acknowledge now it's the price leader in the world.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you very much, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. I will link the WASDE report in today's show notes, which you can find on agtoday.net. We're cutting to a short break now on agriculture today, but we'll be back with more ahead.